I'm Shar Guzman, your dedicated account executive here at NewFi Wholesale. NewFi has been around for a decade now. However, our leadership has been around for 30 plus years. The leadership comes from the Greenpoint days, and folks who've been around in the industry for a while know the reputation that Greenpoint has, and we like to call ourselves like Greenpoint 2.0. So I've been around with NewFi for 5 years. So I've been around half the time NewFi has been. I just actually celebrated my 5 years, so very, very grateful for the time here with NewFi. I've
Congratulations.
got 11 years. Thank you so much, Connor. I've got 11 years in the mortgage industry, spanning different roles. Uh, and so yeah, so again, like I said, Connor, thank you so much for the invite today. And it's an honor to be here on your platform and sharing what is a DSCR loan. We ready to get into it?
Yeah, thank you for coming on. Yeah, and happy to have you on this series of bringing on different account executives that have specialty programs that aren't quite inside the typical box or the scope of a conforming or qualified mortgage that someone might be using. So help expand the idea and the mindset of options that people might have to help get into a home, buy an investment property, or other things that are outside of the box to be able to help grow the amount of people that are in home ownership. So yeah, let's get into DSCR, which is debt service coverage ratio. And can you walk me through kind of what that is and who might use something like this and what your program specifically is?
Yeah, absolutely. So DSCR, debt service coverage ratio, like you mentioned, is a loan for investment property mortgage that your clients can qualify based off the cash flow of the rental property. We use the subject's rents as income instead of employment and debt qualifications. So the DSCR loan is a non-TRID loan. What this means is that your borrower can qualify with less documentation and close quicker than other investment property loans. Now, who is a DSCR loan for? Now, a DSCR loan can be for a novice investor or an experienced investor. How do we qualify these borrowers? Well, a novice investor is someone who has not owned investment properties within the last 36 months for longer than 12 months. An experienced investor is an investor who has owned one or more properties for 12 or more months within the last 36 months. Now, where do we find these types of borrowers? Oh, there are so many sources. So just to name a few here, and there'd be quite a few, would be realtors, financial planners, insurance agents, CPAs, online investor communities, social platforms, clubs, title insurance reps, and even private capital lenders. So those are all sources of where you can source a borrower for a DSCR loan.
Yeah, and to get a little more into it, so I found a calculation that DSCR equals the net operating income over the total debt service. So I guess to qualify, and one question that I had from a client is that amount that needs to be covered by the total rents, is that including the taxes, insurance, interest, maybe an HOA payment, or is that solely off of the principal and interest on the mortgage?
Thank you for asking. Good point here. That would include the PITIA. If there is a homeowner's insurance, you would include that A, of course, in there, but otherwise it would be the PITI. And a niche here at NewFi that helps our borrowers qualify. Let's say if a property is not breaking even or on a positive cash flow, we can qualify using the interest-only payment. So that is definitely a unique option here at NewFi.
Okay, yeah, so it gives more flexibility on who can qualify and what properties would qualify. Interesting. And then as far as the down payment requirements, what's typical there? And just to clarify, with this DSCR loan, that means no credit pull, no income verification. Can you walk us through some of those?
Yeah, absolutely. So yes, you will need to pull credit. Borrower does need a minimum of a 640 FICO to qualify. And I'm sorry, what was your other question you had asked? I apologize.
Typical down payment amounts.
Typical down payment. Okay, so here's where we must qualify a novice versus an experienced investor. So a novice investor can qualify for up to 75% LTV. Now, they must own their primary residence as well. So and then an experienced investor can qualify for 20% down. Because
Okay.
the reason why, just to touch back on, they must own a primary residence for a novice investor because it can't be a first-time home buyer. Also, a niche of ours is that let's say your borrower doesn't own a residential investment property, but they own a commercial investment property. We can use that as qualifying them as an experienced investor.
Okay. And then as far as the properties that would qualify specifically for a DSCR, is that only residential properties where it's 1 to 4 units, or can you go beyond that into the commercial space as well?
Thank you for asking. Residential only, up to 4 units, and condos.
And then outside of DSCR, are there any other, certain programs that you're able to offer at NewFi, maybe bank statement loans or other ways to help self-employed individuals or investors be able to qualify for properties a bit easier?
We have our other non-QM products that allow for qualifying borrowers using either full doc or alternative documentation to purchase an investment property. But the path of least resistance would be the DSCR loan, since with the DSCR loan, there are no tax returns or employment required. Borrower can have an unlimited number of properties. And on our 1003 for NewFi, on our DSCR product, we're only looking for the subject and the primary. We're not looking for all of their REO to be listed on the 1003, which helps the process, facilitates the process a lot quicker. We are also allowing for short-term rental income, and also cash out can be used for reserves. So this is such a great product for investors, and NewFi is definitely a leader in the market with DSCR.
And then how do you determine what the rent amount for qualifying would be? Is that from a rent schedule that would be ordered at the time of the appraisal? For short-term rentals, how is that determined?
Thank you for asking. So for long-term rentals and short-term rentals, either way, on any loan, we're going to order a 1007. We want a 1007. But we do also, if you have a purchase and you happen to have a renter that could be following right after the funding of that loan, then we could potentially use that lease as long as the rents are within a certain percentage of the market rents within the area, which would be 100%, 120% of the market rents. Now, short-term rentals, if we're talking about a purchase, we'll use what is called an AirDNA report, and that tells us what the projected revenue is for a property in the area. It tells us the occupancy rate and the market score. Now, those are important numbers to look at because occupancy rate is required to be above 60 and market score above 60 as well. So might be 50. I need to double check that. But yeah, so that's something that we're going to double check up front, you and I, when we talk about our DSCR loans. Also, another method for short-term rentals is a 12-month look back. Let's say you have it's a refinance. We can use the 12-month look back for that particular property to see what the projected income was for that property.
Interesting. And then just an off question that I had for someone that wants to be a potential investor or buy a property in specific, do you know if there's any resources or websites that they can use that gives a ballpark of what realistic rents might be for a certain property?
Thank you for asking. That's such a great question. So what we utilize is for short-term rentals, we use airdna.com. Again, that's airdna.com for short-term rentals. It's a great resource. And then we also use, for long-term rents, we use rentalmeter.com. And we will look at the average revenue for that, average monthly rents for that particular area for that property. And sometimes give or take about a couple $100 from that rental meter because it's never going to be accurate. So definitely doing your homework up front and searching other sources, for example, like Zillow, and looking at their Z estimates. And as you know, that's also not going to be as accurate as we would like it to be. But if you're using Rental Meter and you're looking at Z estimate and maybe another source, if you find one, let me know. But that would help really get in a closer idea of what that market rent will be for the particular area of that subject property.
Absolutely. Yeah. Thank you for that. Yeah. It's kind of like, comparing those websites, it's just trying to find a ballpark of what rents would be similar to like a Credit Karma or the resources for credit score, just to help give you a
That's right.
ballpark of what your score might be in the range of.
It's important to do that on every property too. Just like when you're qualifying your borrowers for any type of other loan, full doc loan, alt doc loan, and you're using their income to qualify, here you're using the income of the property to qualify. So I always like to tell my partners, when you are working on a DSCR scenario and your borrower says, well, I'm looking at this property, that property, and this property, well, you want to research each property individually to make sure that it's going to debt service. That's very important. So, Connor, I mentioned earlier on when we were preparing for this session here that we also have a HE loan. It's a fixed rate closed end second. Okay. And what this HE loan can do is it's a great way for borrowers. Let's say a borrower who's never owned an investment property and they have some equity in their property and they decided they want to become an investor and they want to start their investment portfolio. And what a great way to do that with our fixed rate second. You pull some cash and use that cash for the purchase of your investment property to get you started. So it's an incredible loan. Again, like I said, it's a closed end second, fixed rate. So we offer it on a 10, 15, 20, and 30-year term. Borrowers can borrow as low as $75,000 and up to $500,000. And the max LTV on that is going to be 85%. So great method for expanding on the portfolio. So nice option that we have here at NewFi.
Yeah. And so just to clarify, would the HE loan be available on investment properties also, or is that only on primary residences?
Thank you for asking. And yes, it is for primary residences only. We soon will be expanding out to second homes and investment properties on that specific product. But we do have another product, Acadia, that does allow for second home and investment property second lien financing.
Interesting. Yeah. So that allows you to get a fixed rate, a fixed term, instead of having maybe a HELOC, which would be a variable rate. And the terms are adjusting. This would lock you into a certain amount that you know what to expect moving forward. That's good. And then aside from that, were there any bank statement programs or any other programs that might be available?
Absolutely. So non-QM is our bread and butter. Now we do offer jumbo AUS and the closed-end fixed rate seconds, but like I said, non-QM is our bread and butter. So we offer all the standard methods to qualify for non-QM, which would be the 12 or 24 months business or personal bank statements. We also offer 1099, asset depletion, CPA prepared P&L, a proprietary method that we call CPA gross receipts, and IRA and trust distribution. And you can also combine those methods as well. So definitely a huge pickup for your borrowers here, and part of our niche here at NewFi, where you can utilize those different methods and compile them together.
Yeah, those are all great options that allow a lot of flexibility. So when you mentioned the CPA P&L, does that mean that they have to have maybe 1 year of tax returns and then they could go off based off of the current P&L for the current year, and that would help qualify them for the loan amount?
So without thinking about the tax returns, we would just, the borrower would just need to go to their CPA or tax preparer, licensed tax preparer that filed their previous year's returns, and just request a P&L that is of the last 12 months. And then we would ask
Okay.
for 2 months of business bank statements to support that P&L, just to make sure that there's not more than a 15% decline. So it's a nice way to qualify your borrowers using a slimmer package and finding an alternative on as far as income. Sometimes maybe they made a little bit more this year, and so that could be a great way to capture that more of that income.
Awesome. And then you mentioned the 1099 program. So that's where, let's say, for example, someone's a real estate agent, they receive 1099 income. They're able to just use those 1099s in order to qualify. And how many years of 1099s?
Absolutely. And I love this question, by the way, because this is also part of another niche that we offer that's unique to NewFi. So we offer 1 and 2 year 1099, but we also offer borrowers who have recently transitioned from W-2 to 1099. We offer those folks financing. And if those folks do not have any overhead expenses, and they can prove that with a letter from the company that contracts them, we can utilize 100% of their income versus when we qualify. Yes, I love it. I see you getting excited. Trust me, I get excited every time I talk about this.
Yeah.
And so we can use 100% of that income versus using 90 or 95%, because the expense ratio for 1099 would be 10% versus other self-employed borrowers who are not 1099 at a 50% expense ratio. Huge difference.
Wow.
And
Yeah.
just like bank statements, where we can utilize a letter from a CPA or tax preparer to go as low as 10% expense ratio on the 1099 for borrowers who do have overhead expenses, we can go as low as 95%, excuse me, as low as 5% expense ratio. So with that CPA letter. So incredible niche that we offer. The pricing is competitive across the board. And I have to add that everything that I just mentioned, with exception to DSCR, everything on the non-QM space is available to your ITIN borrowers. And they can
Okay.
also compile all of those different methods to qualify to obtain a loan.
Yeah, and that's a great transition into ITIN loans. So ITIN, can you walk us through what essentially that is, who might be using an ITIN loan, and then some of the programs that you have available for that?
Yeah, an ITIN borrower is someone who's a non-permanent resident, and they have been provided with an ITIN number, which is a tax identification number. It is equivalent to a social security number. So you, as a loan officer, would pull their credit based off of that ITIN number, and we would qualify that borrower just like we qualify any other borrower.
Interesting. And so then essentially you could use that ITIN as a, non-permanent resident, and all of these programs for the most part essentially would apply to those borrowers as well.
Absolutely, everything in the full doc and alt doc spaces would apply to the ITIN borrower. DSCR is excluded. Our closed-end seconds are excluded, and so are AUS jumbo. So specifically under the non-QM space.
Awesome. Yeah, that offers a ton of options for people that maybe don't have their full citizenship yet. So any other programs that NewFi specializes in or that you like to cover? Otherwise, that's been a ton of great info.
I just have to say that NewFi is an innovator. We're always coming up with new methods to qualify. We've got proprietary products that are exclusive to NewFi. One that I will mention is Equity Choice. It's a shared appreciation loan, and it comes with a below market interest rate and no monthly payments. We can talk about that on another time, and I can bring my team who leads the way on that particular product, but an incredible product for your borrowers who have a good amount of equity in their primary residences. We have a lot to follow. We've got non-QM second coming up here, so please stay tuned to my emails. I know you're seeing my emails. I know you see my videos coming through every week. It's a way for me to get in front of you and let you know what's latest and greatest at NewFi. We've got a ton of new things coming up, and we're always looking to stay ahead. So always stay tuned, and I've always got something new. Specials too.
Awesome. Perfect. Yeah. Thank you for joining me on the podcast, Shar, and looking forward to having you on again sometime soon to go through more of your programs. If you have any questions on anything that we covered, make sure to leave a comment below. Reach out to one of us, and we'd be happy to help.
Yeah, Connor, thank you again. Appreciate you having me, the invitation. What an honor to be here and share this information with your platform. And as you know, I'm your dedicated account executive, and I'm always here and happy to help you. So if you have any questions, any scenarios that come up, please do not hesitate to call me.